Hi everyone, welcome back to the Wild Wolf Financial Team. This is Jim and I'll be your financial analyst in gold. Today is Wednesday the 16th and we have entered the third trading day of the week. Now let me start with the market. The market opened positive today at $1848.16 an ounce on the Asian section. Gold price has jumped $22 from yesterday's opening. So if I do look on the chart, we can see the price jump to today's price, which currently is at 1854. Now, going back from the first trading day, based on the hourly chart, we can see that the sellers were in control as there was a bearish movement. So if we do look at this area here, we can see that there was a very strong bearish movement. And the buyers tried to push the price back up to 1830. So the prices were still trying to go back up. And the sellers managed to breach the support, dipping prices to lows of $18 at 6 p.m. GMT plus 8. So at this level, we can see that this price was being tested. Now, the bearish movement, I would rather say the bearish momentum, dragged the prices below the range. So if I do zoom back out, we can see that the range that the gold was in was on this level here. So since the beginning of the month, prices did fluctuate to highs of 1875, but nonetheless, it was within this range here. Now, moving on. So let me zoom back in. Now, moving on to the charts, buyers enter the market spiking prices up to $1839, but could not sustain the selling pressure. So as we can see here, prices were spiked to as high as this here, and it did not sustain. So buyers did try to test this level at the moment. And from the bullish candle on 9 p.m. GMT plus 8, so that would be here at this candle here, which is a very strong bullish candle, we can see that it was, we did see strong buying power. Now this eventually led into a bullish pennant since there was more buying within the ascending triangle. So the triangle I'm referring to is here. As you can see that it was ascending, so we did have dips. Buyers were still in control, trying to push the prices higher. Now at this stage, where it is here, we can see that this was clearly a bull signal, as prices will shoot up. So this was a clear signal. Now, the bulls took control yesterday on the second trading day of the week at 9 a.m. GMT plus 8, as we can see on the chart. Now this was, as I mentioned, a clear signal for the bulls. Now there was a strong retracement as prices did spike $36 an ounce until today. So the prices did shoot up. As you can see here, this is a very strong bullish momentum. Now, based on the daily chart, we can clearly see that the buyers took control of yesterday and is continuing the momentum. So as we can see here, from the bearish week down going up to this week, so we can see here that it is clearly a very strong bullish pattern. Now, yesterday's signal shows us that when buyers took control, let me go back on the hourly chart. So as we can see here, the bears were not able to sustain the buying pressure to keep the bear run going, thus having heavy resistance. So in this area here, on this candle, we can see a very strong bullish candle. This is the time when we call it the heavy resistance. So prices did exit the range, as I mentioned previously on the gold being within the range. Now we can see that this was the level of prices going for higher. Now, during this strong bullish momentum, the upper shadows and the size of each bullish candle also indicate that buyers were fully in control. So from here, as you can see, there are clearly strong bullish candles. So even the wicks were still trying to push the prices higher. So we can understand that each wick shows that each price was being tested, but going higher. So it was a very strong momentum, bullish momentum. Now, the bullish candle that took place on 9 p.m. GMT plus 8 yesterday was the previous resistance that was broken, touching highs of 1855. So as you can see here, this area, this is where the resistance was broken. And moving on. So we can see also that gold did not sustain within the range. Now, the yellow metal is still currently following its direction. So if we do look close up, we can see that there are a couple of rebounds here, and we can see that gold is fluctuating, but nonetheless it is on a ascending momentum. So gold is currently still rising. Now, later on during the day, based on the economic calendar, today we will be able to witness high volatility with strong fluctuations in the market. And the following economic data that are due to be released today will have a high impact on the market. If I zoom back out, let me explain a few points that will have a strong impact on the market. And the following economic data will be as following. So we are referring to the flash manufacturing PMI and the FOMC statement, along with the FOMC press conference, FOMC economic projections, core retail sales, and retail sales. Also, federal funds rate. Now, this has a medium impact, but nonetheless, all these data that will be released today will have strong fluctuations, as I mentioned previously, in the market. So therefore, traders trading today should definitely follow the main points, which I would suggest it as: firstly, reduce your volume. Secondly, go strict with your stop loss. So gold currently is trading at $1854 per ounce. Just before I end my session, I would like to thank all of you for watching my video. And if you did like my video, please do give us a thumbs up. And please do not forget to subscribe. We will keep you updated on a daily basis. Looking forward to keeping you updated soon. Wishing you all a great day ahead. Thank you very much.